What a week it's been for BETR stock. After a whirlwind of gains that put the company squarely in the spotlight, Friday brought a pause. Shares of Better Home and Finance, ticker BETR, closed at $53.02 per share, down $2.95 or about 5% on the day. On the surface, a 5% decline looks like a setback. But when you put it in context, a week in which the stock was still up roughly 60% from where it began, Friday's pullback looks more like a natural breather than a reversal of fortune. This is exactly the kind of volatility you'd expect from a name that has suddenly gone from obscure to front-page news. Much of this surge began when Eric Jackson, founder of EMJ Capital, publicly put his weight behind BETR. Jackson is well known in investing circles for his early calls on disruptive technology names, and when he talks, people listen. He dubbed BETR the Shopify of mortgages, a catchy but meaningful comparison that frames the company as a potential platform disruptor in an enormous, old-fashioned industry. Over the past week, that narrative helped propel BETR to intraday highs in the 90s before settling back into the 50s by Friday's close. Even with the pullback, this is a stock that's been transformed in the public eye in just a handful of sessions. On Sunday, Jackson tweeted something that adds a new twist to the story. According to him, the main reason BETR stock didn't go even higher last week was that Pine Brook, a major early shareholder, used Monday's big pop to unload its entire stake, something he says is confirmed by insider filings. In Jackson's words, "They're done now, it looks like, so the stock should move a lot higher this week." That's a strong statement, and it gives investors a new lens through which to interpret last week's trading. So what do we actually know about this Pine Brook sale? Insider filings show that Pine Brook entities sold hundreds of thousands of shares of BETR at prices ranging from the 40s to the mid-70s during last week's surge. By the end of those transactions, their beneficial ownership in BETR was essentially reduced to zero. This wasn't a token trim, it was an exit. For a while, Pine Brook had been a large, patient holder. They saw Monday's spike as the right moment to monetize, and they did so aggressively. For short-term price action, this matters a lot. Large block sales create an overhang. When traders know that a big shareholder is selling into strength, it can cap rallies and absorb buying interest. Once that seller is gone, the supply of shares hitting the market at any given price drops dramatically. That's why Jackson is arguing that with Pine Brook out, the path is clearer for the stock to move higher. In other words, last week's ceiling might have had less to do with waning enthusiasm and more to do with a big seller sitting on the other side of the trade. There's a dual message here, though, and it's worth unpacking. On one hand, the removal of a large stakeholder can indeed be bullish. It's like taking a weight off the stock. On the other hand, it's also a signal. Someone who was in early, with a front-row seat to the company's story, decided now was the time to exit completely. We don't know their reasons. It might simply have been a liquidity event, locking in big gains after a huge week. It could also be a view on valuation, or a shift in their investment strategy. For new investors, the key is to acknowledge both sides. The supply overhang is gone, but a sophisticated player decided to cash out. Friday's 5% drop looks mild against that backdrop. It's almost a natural exhale after a frenetic run. Stocks rarely move up in straight lines. Momentum phases are typically punctuated by pullbacks and consolidation periods, and these can actually be healthy if they reset sentiment and allow new investors to enter at less stretched levels. From a technical perspective, holding in the 50s after touching the 90s shows there's still plenty of interest, but the market wants to see what comes next before chasing it higher again. That what comes next is where fundamentals and macro conditions come in. The most interesting macro data point this week was the report that new single-family home sales in August surged by more than 20%, to an annualized rate of around 800,000 units. This was well above expectations and suggests that demand in the housing market is picking up. Lower mortgage rates and builder incentives are playing a role, and if the Federal Reserve follows through with further easing, the trend could continue. For a company like BETR, which makes its money by originating mortgages and offering related services, more housing activity means more potential business. This is exactly why Jackson's thesis resonated in the first place. BETR isn't just another mortgage originator. It's a digitally native platform trying to automate and streamline the entire homeownership journey. Its Tinman AI underwriting system and Betsy voice assistant are designed to cut costs, reduce paperwork, and speed up approvals. By doing so, BETR can theoretically handle far higher volumes at lower marginal cost than traditional lenders. That's the core of the Shopify of mortgages analogy, not just digitizing, but platformizing. Beyond mortgages, BETR is also moving into insurance and real estate services, building an ecosystem where customers can get everything they need in one place. If it succeeds, it can capture more revenue per customer and build stickier relationships. The challenge is execution. Scaling in a heavily regulated, cyclical industry is hard. The company is still losing tens of millions of dollars per quarter, and management's goal of reaching adjusted EBITDA breakeven by 2026 is ambitious. But with the balance sheet now cleaner thanks to the retirement of more than $500 million of SoftBank convertible debt, BETR is in a stronger position to try. All of these elements, the macro housing backdrop, the technology, the balance sheet cleanup, and the removal of a major selling overhang, combine to create a compelling but volatile story. Friday's dip doesn't erase that. If anything, it gives the stock a chance to consolidate before its next move. The real question is whether the market will see new catalysts in the coming days and weeks to push the narrative forward. So what would those catalysts look like? First, more macro data. If September and October housing data continue to show strength, and if mortgage rates tick down further, the market may start pricing in a stronger environment for originations. Second, company updates. Investors will want to see whether funded loan volumes are accelerating, whether margins are improving, and whether losses are narrowing. Third, insider and institutional behavior. With Pine Brook out, who's stepping in? Are new funds disclosing positions? Are company insiders buying shares on the open market? These are the kinds of signals that can add credibility to the story. For traders and short-term investors, BETR remains a high volatility name where sentiment and flows can drive big moves. The Pine Brook exit may have cleared the runway for another surge if fresh buyers emerge. For long-term investors, the focus has to be on execution. Can BETR really grow into Jackson's projections of $12 billion in revenue by 2028? Can it take advantage of macro tailwinds without being derailed by regulatory or operational missteps? Those questions can't be answered in a single week, but they frame the long-term risk-reward. In terms of tone, the takeaway from this week should be measured optimism. Yes, the stock dipped 5% on Friday. But after a 60% gain in a single week, that's almost trivial. The underlying narrative, a technology-driven disruptor in a giant industry, backed by a respected investor's thesis, now freed from a large seller's overhang, remains intact. Macro data are beginning to support the story, not contradict it. There will be volatility, but there's also potential. Looking ahead, next week will be a key test. Without Pine Brook selling into strength, does the stock catch another leg up on good volume? Do we see stabilization in the 50s as a base before a move higher? How does the next batch of housing data come in? These are the things to watch. If the answers are positive, Jackson's tweet about the stock moving a lot higher could prove prescient. If not, then this week may mark the start of a more extended consolidation phase. For your viewers, framing it this way adds depth beyond the headline moves. It shows that you're not just chasing price action but also connecting the dots between insider activity, macro data, and long-term execution. It positions you as someone who can separate noise from signal, which is exactly what investors want in a fast-moving story. So to recap in one breath, BETR closed Friday at $53.02, down 5%, but still up 60% for the week since Eric Jackson first publicly endorsed it. According to Jackson, Pine Brook used Monday's pop to dump its entire stake, which may have capped the upside. Now that the selling overhang is gone, the stock could have a clearer runway. Meanwhile, macro housing data from August shows strong new home sales, which bodes well for mortgage activity and supports the company's long-term opportunity. The next chapter depends on fresh catalysts, execution, and whether buyers step in without a big seller on the other side. If you present it this way, acknowledging the risks, explaining the Pine Brook angle, tying in macro tailwinds, and pointing to what to watch next, you'll deliver a recap that's both measured and bullish. You're not promising the moon, but you're showing why the story is still compelling. That's the sweet spot for a stock like BETR right now.